Hello, it's Brad Laurie, and today I'm honoured to speak with Sasha Raksha. He is the CEO of Own Network, and he's here to give you an update on all things Own. Sash, thank you very much for your time this evening.
Yeah, Brad, thanks for having me again. Always a pleasure.
Likewise, mate. Now, obviously, there's a lot to get through because it's been a little while since we last spoke. But Sash, essentially, just give us a quick rundown on Own in terms of what you stand for, what your slogan is, and what you really represent as the leader of this network.
Yeah, so Own, in simple terms, we help businesses raise capital. And in 2017, we started off and we had this vision of a digital share on the blockchain, because in the current traditional system, you have many middlemen between an issuer or a business and the investors. You have, a registrar, you have a transfer agent, you have a clearinghouse and all that. And we saw an opportunity to cut through that and create a direct link between a business and an investor. And that's what we've been doing. And we've built a lot of products and services around that.
Right. So obviously the key point is cost savings, time saving, economy. They are arguably the fundamentals for any business startup to be of service and of value. Now, let's break it down a bit. STO is a buzzword right now as well, Sash. You represent that with your platform. Let's move it though to the discussion of equity in terms of equity-backed asset systems, that digital asset. Why are these terms so important to the whole structure of what you're doing?
Well, securities is quite wide-reaching in the sense. And again, when we started, we talked about digital shares, right? And digital assets or digital shares. And then kind of this STO term became kind of like normal this year and last year. Equity-backed means in the sense that there is actual physical equity, as much as it can be physical, or physical assets that are backed by a specific digital asset or digital token. So you effectively own a piece of that asset and you have specific rights around it. You have voting rights in terms of equity, you have dividend rights, and you have other rights because you effectively have an ownership stake in that asset. And that's why we always say equity-backed tokens rather than STOs, because there are a number of nuances where people don't have voting rights, they don't have dividends, or they don't actually own the asset. So
right. Sure, and I'm sorry to interrupt, but that harps back to the ICO narrative. It harps back all the way to 2017 when we saw a lot of people thinking they were buying exactly what you said, Sash. They thought they were buying ownership. They thought they were buying dividends. They weren't. Absolutely not. Instead, they were buying a concept, a construct, a hope for something of that nature, and that's all it was. And it's even been proven in the way in which some of these startups have actually changed their terms so that it proved right from the beginning when they had their contractual agreements, they were kind of null and void because they could do whatever they wanted. Again, proving there was a lack of contractual agreement. And you're going to change that by having this true ownership system in place. Let's talk about that in the context, though, Sash, of IPOs. Now, obviously, right now, you can go and do that. You can set up a company, you can go through all the right processes and regulations in any part of the world, in Europe where you are, or in the US or where I am in Australia. Why would anyone need to do something like this if they can already fractionalize, essentially, have shareholdings and do it all completely seamlessly, arguably, if they are compliant?
I think the issues with IPOs is, if you look at the markets, and I think we talked about this last time, is IPOs have reduced year on year. Yeah, if you look at 1995 or so, you had, in the US, you had, I think, 100 IPOs. Now you have 20 or 30. So the funnel has become smaller and smaller because the regulatory and compliance and cost hurdle for larger businesses wanting to go into IPO has become a burden. And a lot of good businesses, good private businesses, are now looking at other means. They're looking at other methods. I'm not sure if we talked about this, but for example, if you look at Spotify, if you look at some of the others, they did direct listings on the stock exchange. So they didn't really raise capital. They just went on the stock exchange. At the same time, as you know, the ICO model has emerged, which is an alternative to venture capital, private equity, and other fundraising means. So there's a need for capital, and private businesses always need capital. And we're trying to build a new method, and I think ICOs has been the catalyst to be able to do that, but something that is legal, that is regulated, that is compliant, and also gives the investors the protection they need. And that's really the STO model as such.
Right. Now, talk us through, though, as well, the kind of target market for this as well? Because Sash, my understanding is you're also looking at the broad spectrum of small business as well. Why is this relevant in the context of what you're saying?
Well, I mean, small businesses are growing and growing, right? And if you are a shareholder of a smaller business, there are like, breweries and chains that you see every day, and you would like to potentially become a shareholder or own a piece of the business because you use them, you facilitate them every day, and at the moment you can't. Those businesses get a banking loan, or they have their VC backed or so. But once they go to IPO, even you as a retail investor, you kind of lose out, because the reality is there's always a small portion of retail investors, more institutional investors, that are getting in early. You look at the big IPOs in the US and in Europe, and institutional investors are the ones getting in early. So we're trying to flip that and really, I know it's an overused term, but to democratize ownership in assets, in businesses, and all that.
Right.
And yeah.
And that's going to be key. So I want to talk about that, because I heard you speak with the Crypto Lark about this. Now, you mentioned that roughly there's about 80% of often business in relation to traditional sectors and traditional stake in business itself. Now, you want to flip this and increase the stake, arguably, for those retail investors or for those who are the non-traditional. But in the same time, you mentioned that there is this truth that there is a sense of stability that aligns with traditional sectors. So talk us through what you see in terms of the role for traditional business and traditional enterprise in the own network, how you can essentially reformulate or reframe the whole business model, but include them in the space.
Yeah, we have a number of business models. We have obviously the issuance bit. So we're talking to private businesses, and they want to do a token offering. They want to sell a certain percentage of the equity, and we're helping these businesses to basically do a prospectus to make sure that the legal and the regulatory elements are adhered to, that they're financially sound. We have a valuation component where we can help the businesses to value how much they're worth, because that's really important. So that's one element. And the other element is enterprises. And around a lot of enterprises, a lot of businesses have assets. They have needs to unload or offload these assets. And if you're looking at private debt, for example, which we're actually focusing quite a lot on in the background, a lot of businesses have corporate debt, and they want to get this debt off their balance sheet. So we're working with a number of businesses in the background to tokenize the debt, and maybe attracting new form of investors, either retail, institutional, for these sort of vehicles that are traditionally available already. We're just making them more efficient.
Right. Okay. So do you expect, though, that the percentages will change, though, Sash, as you start to really educate enterprises, but even the retail investors, as you embark in this global effort? Do you think that the ratio is going to change from the percentage of traditional investment in something like something that is of an equity-based digital asset, or anything that you see as an IPO? Will that transition into an increase and influx in retail investor percentage?
I think it will, if the methods and the process to invest becomes easier. And this is what we're focusing on, right? We have an investor app where you in future can participate in offerings, and you can basically just participate with the click of a button. That is not possible at this stage. So the hurdle for your moms and dads effectively is very high to invest in a business here and there. In many cases, you cannot even invest in certain companies. If you're an Australian, you cannot participate in certain US-based company listings unless you obviously have a broker that has a license that has access to the NASDAQ or the London Stock Exchange or whatever. So there are regional and global hurdles, and we're trying to simplify that. And the whole STO space is all about simplifying the process for the business, but also making it easier for the investor to get access to these sort of investment opportunities.
Right. Now, you focus on two key verticals, essentially. You mentioned them before. One of them was debt. The other one was funds. And later, I would imagine you focus more so on equity. But right now, they're your two focused areas. Why is debt such a big issue, though, right now? Talk us through some of the numbers globally and how the magnitude of this issue.
Yeah, I don't know. I could throw around some $1 trillion numbers, but I don't really know. I mean, the debt market is, I think, 800% that of the equity market. So it's huge. And
Right.
every business has debt. Every business has corporate debt. And we're working in the US at the moment, we're working with a few companies to offload their debt. And what these companies traditionally do is they basically bundle them up, they sell them, and they bundle them up, they productize them, they put an interest rate or something else to it, and then they sell it to the traditional institutional or asset management markets.
Mm-hmm.
So that process is happening all the time. It's happening already. However, the fees of the same are horrendous in that space as well. You know, you've got 4, 5, 6% fees, which an asset wealth manager takes. You've got other fees involved in the process. You have clearing and settlement involved as well. So we're working with a couple of companies at the moment to basically model a process where we effectively have less fees, which is always important to these business because it means their margins are higher. But at the same time, what's attractive to them is, could we attract a whole different investor base for them? So for example, a US company is interested to attract maybe Asian or maybe European investors. Right. And with our platform, this is possible. So there's two things. There's the cost reduction, and then there's the element of getting a whole new demographic to invest in.
Right. And you've also, having learned a little bit more about you, you've attacked this from a very pragmatic approach. You've looked at the global potential of this, and you've looked at different areas of the globe, specifically Australasia. You've looked at the US market and Europe, and gradually progressing even to Africa, as I understand now. So that must be quite exciting that you're moving in that direction globally.
Yeah, I mean, for us, we're a global business, and our key was always that we have global businesses, so issuers on our platform, and that we also are able to attract global investors to these sort of businesses. And our vision has always been that in future, we want to be the platform where any business can list and sell either equity or debt, and you can reach a global investor base through effectively a few clicks of a button. And that is something that currently doesn't exist. So we're working hard to make it happen, even though that regulation and, regulatory kind of and governmental hurdles are still very high.
Sure.
But you take baby steps.
Right. And you mentioned some important points about still working through that regulatory sort of quagmire that it is. It's really complex, and you're certainly doing the right thing there. But I want to talk a little bit more about the design as well, Sash, because you're not a single public blockchain by any means. You do have your own blockchain system, but it's hybridized. Can you tell us why that's so important, especially that private component when it comes to enterprise? Because everything's about trust. And ironically, it's not about the trustlessness of this. It really has to have some sort of permission system embedded.
Yeah, absolutely. And I mean, the biggest element is investor and issuer data protection, right? That already exists in the traditional markets. And again, we're comparing it against the traditional markets, and we're trying to build a model that helps them, that reduces fees, that makes things a bit more trustless in the sense of decentralization. However, you have still the same hurdles, right? You have in Europe, you have GDPR, so data protection for individuals, and the right to be forgotten. So as an investor, for example, you should come onto our platform and say, I want you to remove my data. Yeah. And as an individual in Europe, you need to do that. You need to scrape the data and all that. Now, if you're on a public blockchain and everything is publicly available, scraping the data is impossible, especially because it's blockchain. Right. So that's the reason why we have a private and a public component. The private component is the issuer and investor data, and the public component is the transaction and the asset ownership from one effectively private key to the other. It's all about businesses protecting the data of the businesses and investors protecting the data. And this is why I was saying before with Lark that public blockchains will really have a hard time. And we're already seeing an industry trend where people are moving away from public and they're moving to private chains simply because you have all these data hurdles to overcome.
Right. So in that context, though, because you're a hybridized system, are you advantaged because you offer the both components, the public and the private conduits to enterprise and to the people?
We are at an advantage because we started off with the hybrid model. So our blockchain is built around this whole concept around it, and we own the technology start to end. So that gives us an advantage. At the same time, I mean, it allows us to really be able to quite flexible. So if the regulator says you need to do X, Y, and Z, we can actually build it in because we own the technology and all that. I think, I mean, again, this is crystal ball. In future, you don't know. I think there are great, public frameworks and blockchains that will probably do quite well. However, you're talking to institutional investors, you're talking to enterprises, you're talking to traditional businesses and your moms and dads, and they want security as a number one priority. They don't care if it's, decentralized or centralized. They want a quick, simple process, and they want the security. The public blockchain, we've actually implemented because we had a big debate, do we go fully private or do we go fully public?
Right.
The public blockchain, transactional based blockchain element we've implemented because we're trying to democratize, equity or ownership in that sense. And you should actually see how much assets or tokens a company has given out. And that's something what we're allowing. You wouldn't see naturally the person behind it or the investor behind it, but you would see how much shares or how much tokens, how much assets are being tokenized and digitized. And you should also see the transfer and the movements. So you can catch things like insider trading. You can catch things like, the CEO or the company doing dodgy things, all the good things that you see when you have a block explorer at the moment.
Right.
And that's why we kept the public element.
Right. So to recap that, ownership a plus, and it gets a green light there. Anonymity, no, you're not about anonymity at all. You're about transparency. So in that sense, you're not trying to circumvent authority, as we saw at the beginning narratives of the entire blockchain. Really, it's about making this process simple, more transparent, but most importantly, cater for the needs of those who are going to use it. And that requires privacy and security. Now, Sash, you also built in a fast platform that's new relatively. Key things there were easy. Free was another part of it. Can you talk us through that? Why was that in addition to the technologies and the framework that you've built?
Yeah, I mean, the reason we're building decentralized apps on top and we're not just focusing on the blockchain technology is we really wanted to build a seamless end-to-end environment. So you can build a great backend, but you have a shitty user interface or front end. And we always saw that as one. And that's why we built the FAST platform. So the FAST platform effectively allows anyone, any business, any user to tokenize their assets. And that is available, that is working now. We have 3 products which we launched with, and that's debt, that's private debt, that's a fund, and that's equity. So you can effectively tokenize it. What we're working on hard at the moment is that you can do the whole end-to-end process, in one go effectively. That, for example, if you want to raise 2 or 3 million, you go onto our platform, you set up the token structure, you set up your prospectus and your details around your business, and then you launch it and you get a marketplace where investors can pick up these offers. There are legal and regulatory hurdles, and we're working quite heavily with the regulators to really be able to offer a true tokenization self-service platform. And that's going quite well, and we're making good progress. Again, there are hurdles, how much you can actually raise. I think in Europe, it's 5 million if you stay below that. And there's also hurdles around the amount of investors. You cannot allow certain investors. So again, the FAST platform for us is the self-service element of tokenization. But in the background, we're working with a lot of businesses that, they want to raise 10, 20, 30, 100 million. And they have to go through the whole legal side. They have to engage with the regulator. They have to generate a prospectus. The prospectus has to be authorized by every country. In the US, you have exemptions you need to adhere to. That's quite a costly process, still cheaper than an IPO on private equity raise, but it just takes longer. And that's what we're also offering. And we're helping these businesses as basically a one-stop shop.
Right. Now, in that respect, obviously you're talking about real companies right now, Sash, in real time. What's the pipeline like for these kind of companies? What's the magnitude of them? What's the size of their business itself? And really, what verticals as well are you representing? Is it a broad range? Give us a rundown on actual companies that are knocking on your door and interested in using you right now.
I have to be careful because last time I gave some numbers, everyone got really excited. So I will be really, really careful this
time.
time.
Be careful, yes.
Um,
Or don't.
yeah, I mean, it's a range. So you have startups. They want to raise 1 million or 2 or even 500,000. And with startups, it's a bit more difficult because they have nothing to show for. So you can't really assess their value. You look at the white paper, you look at the team. It's quite tiring because you have to engage with them a number of times, and usually they have no money to start with. So, we charge a listing fee and some of those things. And with startups, it's always a bit harder. Traditional businesses, there's a whole range. There are businesses that are like manufacturing. There are businesses that are financial services. We see a lot of funds that are interested, especially crypto funds that already are crypto funds. They want to tokenize their crypto funds and effectively give tokens out to investors that already invest in crypto businesses. So we're seeing a lot of that. And within the debt market, we're seeing, there's hundreds of millions of debt. And there's a couple of projects we're working on in the background where we're trying to tokenize these sort of things. We're trying to build a model. And I think I mentioned that before. It's also real estate. There's a lot of real estate, property development. Real estate is usually the first because they have such a hungry capital need, and they need to find investors to effectively start and initiate their projects. But it's also a difficult and kind of a red flag industry, so you have to be careful. Sure. So we have a real range. Yeah.
So in that sense, Ash, I want to get it clear though. I mean, what you're making it from the examples, you obviously know about a lot of companies right now working with you. It's not later down the track. That's what I want to make clear, is that the pipeline arguably is full in many respects, but the regulations are of arguably the point that's paramount here. You've got to get that right. The jurisdictions have to correlate with the compliance and the legal frameworks they built in. How is that going? Is it a case of you've got to get that right now before you can start to do this business? Or are you actually doing business in some of these jurisdictions now?
We're doing already business, and the regulation already allows you to do that. So for example, if you have a prospectus and it's approved by the regulator, you can effectively issue tokens, and you can effectively have equity-backed tokens. In Europe, that's possible already. Yeah.
Okay.
In the US, you have some exemptions, but you can do the same. You can issue tokens. So the regulator already has exemptions or has rules in place that allows you to do that. However, it's still very time consuming. You need a lot of lawyers. It's still quite costly, the regulatory side. And I think especially when you look at the slim version, so raising 1 or 2 million up to maybe 5 million, I think the regulator needs to do a lot of things to make it easier for these businesses without generating a prospectus, without so much disclosure, yet also making sure that the investors are being protected. I think that is happening right now. But yeah, I mean, we're issuing, or we're doing this right now. It's already possible. The regulators are already allowing that because it's a traditional mechanism. There's still a few things that need to be improved, but that'll happen over the next few years.
Right. Well, let's talk about that in the context of revenue, Sash, because obviously different regions would imply more growth and more business. You started in Europe, you have the contacts there to start with. So how is the revenue going with regard to the business? And more importantly, talk us through the imperative of these partnerships with regard to the brokers, why they matter, especially when regulation is a little bit stifled in the US.
Yeah, I mean, in the US, it's pretty simple, right? If you cannot connect the buy side, so an investor, with the sell side, a business, if you don't have a broker-dealer license, which means you're not SEC approved and you don't have the FINRA financial market licenses, that's pretty simple. So you either get the license yourself, and I think a lot of projects are doing that, or you partner with someone. We have a partnership with a broker-dealer. We'll have more partnerships in future, to basically be able to offer the service and the technology through that partner. So the partner will actually act on our behalf. Any security token offering will go through the partner, but they're using our technology. Right. The same model we're introducing in other regions as well.
So you've covered your bases. Now you're economical by design for the companies that they wouldn't do it if you weren't. So give us a rundown on the kinds of, I mean, again, going to push the numbers, going to push for revenue as well. Talk us through region by region, Europe, Hong Kong, Australasia, Asia, and then US. What's going on with regard to business, revenue, and potential in the future?
Yeah, first of all, I'm not disclosing revenue numbers. We're a private business, so I'm not doing that. I think we're seeing the largest opportunities at the moment in the US, simply because the capital markets are well developed, and in the US, people are ready to just go for it. If you can reduce fees and improve something for investors, they're much more kind of bullish in that sense. So the US is interesting for us, and we're quite active there. Europe is quite cautious in that sense, but with Switzerland and the UK and all that, we're seeing businesses that are ready to go. And Asia is quite fragmented. So, you know, Hong Kong is different to mainland China. Singapore is different to Hong Kong and China. Then you have Thailand and all these areas. But there's a lot of interest in that space. Yeah, we're seeing revenue coming from all the areas, but at the moment, I would say the US is the larger piece.
Well, that's good to hear. That's good to hear, Sash, because we want to hear that you're making money. So can you just reaffirm that you are indeed making money and that that's increasing month in, month out?
Yeah, absolutely. We're selling licenses, we're selling services, we're doing issuances right now, which a lot of people don't see that because we're still working with these businesses. They're talking to the regulators, they're talking to the legal guys, they're preparing these sort of things. We charge fees for that as well. Yeah.
Right. Now, Sash, you're big on transparency. You said it earlier in the interview. No doubt this kind of revenue statements will be released in some sort of annual report or some sort of audit. Will that be disclosed in some way, even if it's just very loosely for those who are essentially those dividend and shareholders?
Absolutely. Absolutely. Yeah. I mean, we're a private business. We have basically 3 founders and that's it. We don't have institutional or VC money, so we don't need to disclose anything to anyone, but obviously we're very big on transparency. We're introducing a whole new model around kind of equity and ownership. So we will definitely disclose some of these numbers when the time is right.
Got it. Now let's talk about the king in the room, and that's liquidity. You need it. It's imperative for the growth of not only OWN, but also the whole ecosystem itself of both digital assets of today and tomorrow. Now, NASDAQ, traditional stocks, all of that traditional system that's in place for exchanges. What do you see for the future with regard to OWN? Are they important to really reinforce the value of this tokenized economy?
I think every traditional marketplace and business will move to digital assets and tokens. Every business already has a digital strategy. And for them, it doesn't matter if it's blockchain or not, or cloud servicing or internet or whatever. They want to offer a better service. And I think tokenization and the distributed ledgering technology, you know, having no middleman in between will improve these markets and will make them also more profitable. So I think in the next few years, every traditional market will move to tokenization and do certain things. A lot of them are doing POCs at the moment. They're testing the model, but once it becomes mainstream, I think every market will adopt the technology and the usage. Yeah.
Right. And Sash, have you had any discussions with any regulated exchanges? Obviously, there's some that we know of. Well, NASDAQ is a perfect example. Have you had any involvement in direct contact with them to understand where their position is right now?
Yeah, absolutely. And we speak to like the private market teams within the stock exchanges quite a bit. You know, we spoke to the NASDAQ, we're speaking to the Hong Kong Stock Exchange, we're talking to the Singapore Stock Exchange. They're all doing something because of our background and experience we have with post-trade servicing. So basically shareholder management, shareholder engagement, and these sort of things. They're always keen to understand, how do you guys do that? They're generally also very interested in our registration and ownership tracking functionality. Yeah, they're all interested, but again, they're traditional markets and they're very, very slow. So when you talk to them, it takes months, if not years, to get into the door or to get some sort of traction. But yeah, we talk to most of them at the moment. Right.
Okay. So obviously you're already one of those first movers in the space because, again, you're one of the first to issue this. You had the world's first digital register as well. So you must be confident that despite the time it takes, you are leading the way. Now, established companies, you've always talked about this before. Give us some names. Give us some sort of indication when you talk about established businesses transitioning. What's the magnitude of these businesses, Sash? They're not small, some of them that you're working with. let us know what's going on with the kinds of people you talk to.
Yeah, again, I won't give names, but you have, for example, property developers. You have a property developer that has 2 buildings or two sites, 30 to $60 million, and they would like to tokenize 10 to 20% and find retail investors to that. So that's the magnitude we have in that kind of real estate property space. In other areas, you have, manufacturing, and they have, they're 100 million business and they need a few million in terms of capital. So you're looking at tokenizing that. You have a fund, for example, it's a crypto fund. They have 20, 30, 40, 50 million or even more. These are the sort of things. You're not talking yet trillions because, the big asset and wealth managers, they're sitting and watching, but that'll happen over time. So you're kind of starting small and you're tokenizing smaller things to prove the case and then move upwards.
Sure. Now, in that context, you've also attracted the attention of governments around the world. You're registered in Liechtenstein. Now, the INATBA was recently announced as a very broad-reaching global initiative. Part of the EU, you're certainly part of that as well. Talk us through that. What's your relationship with the INATBA? Was there anything, or is there any plan for you, because Liechtenstein is involved in that? Are you going to also take part at some stage?
I don't really know. I heard about it, funnily enough, only yesterday when some teams announced that there's this sort of forum. We're very focused on us and making the platform and the product and all that work. We will definitely engage. I think, will we be a member? I don't know. I'm always very critical of these sort of things. I don't like to be a member of the blockchain consortium XYZ unless there is some real need and reason. I don't like to sit at roundtables where old people just discuss, the next trends and all that. I used to do that in my previous job. So I'm always very suspicious of some of those things. But if it makes sense and if it works out, we will definitely look at membership.
Right, got it. So it's all about pragmatics and proof. I understand. Yeah. Let's add another P to it, and that's partnerships. There's always new ones as well that come up in the gaps between when we talk. So give us some as well, Sash. What's going on with some of these partnerships you're forging in any of the areas and any of the verticals that you do business? Tell us something about some of these things you've been signing.
Yeah. I mean, partnerships are important for us. As I mentioned before, in some areas, we need legal support and we have legal partners. We have auditing firms, so audit partners. So we're talking to the Big Four in terms of partnership at the moment. We also have some smaller auditing firms that are helping us with business valuations. So again, all these networks are really, really important for us because we can offer a full end-to-end service for these businesses. Because you need an audit firm, you need a really, really good lawyer that understands security tokens and crypto tokens and tokenization as such. So we've got basically the best guy in Liechtenstein at the moment as a partner. We're talking to banks. So we have banking partners because everyone needs a bank account. When you issue something, you need a bank account. And so we have banking partners in the background. We're setting up a partnership site on our website at the moment where people can see the logos. And they can also basically fill out a form to become a partner of our network. And being part of our partner network means you get access to knowledge, you get access to issuances, you get access to a broader base of businesses and investors. So it's also important for these businesses. We are growing in that sense, and we're growing our partner network. And what we're not trying to do is too many kind of crypto partnerships because first of all, this is always a bit tainted. There's always a little bit kind of like, you don't know if the teams are really in for it and all that. So we're focusing more on traditional partners.
Got it. And as you said, you're driven by the terminology of digital asset rather than crypto itself, because it's all about, at the end point, being essentially invisible in terms of the blockchain itself and more about the service that you offer. Now, ironically, we're going to talk about exchanges though, because that is something that everyone wants to know. Now, right now you are live on the market, you're on exchanges and accessible. What's the plan right now with subsequent exchanges? Top 10 is on the tips of many people's tongue. I've read it in Telegram as well. Many people want to know how many exchanges are coming. What exactly is the plan for you, Sash, leading this out?
Well, I mean, we are a utility token, so we have to play by the rules. And I think, Brett, you know more than me that we can't approach exchanges as such, but we've been approached by exchanges. So yeah, a lot of that stuff is in flight. Again, right. I'm not really concerned about liquidity, about our token, about the marketplace in future. It's a utility token first and foremost. But yeah, once we launch and once we do the token swap, etc., there will be some good exchanges. Absolutely.
Sure. Now, to play the devil's advocate, some of the people who participate in this, they are speculators, they are not utility holders, and they know that. So in that respect, they have the frame of thinking, we'd like to see an increase in liquidity or an increase in volume. What do you say to those people who literally are listening, thinking in that speculative frame, not in the utility, because of that possibility of engaging in the purchase of your token?
Sorry, let me just understand the question. You want me to respond what I think about traders and speculators?
Yes, exactly. Because it really exists.
Yeah, I mean, to be honest, we're all grown up, right? I know that they exist, they're there. Do I like them? No, absolutely not. Do I really, play into that? No. I think we've learned our lessons to be a little bit more humble and not to announce too much, and that's why I'm not disclosing names. Mm-hmm. I think a lot of the stuff, as I mentioned before, is we will just do, and we will not do an announcement of an announcement anymore. If a big exchange will list us, they will just it'll just happen. We're not going to announce that sort of stuff.
Got it.
We're trying not to play into the hands of the traders and speculators, even though they are there. It's part of the ecosystem. It's a necessary evil. Mm-hmm. I don't want to be too negative. Again, there's people on both sides. We're really focusing more on these people that have been with us for a long time, that really understand what we do, that can see the utility, and obviously they are our favorite target group.
Well, to be honest with you, Sash, it's refreshing. You don't often hear this kind of open response from the CEO. What you're saying is you really want this to be a true utility, and you're not going to pander to any party to detract from that plan and that target. So respect to you for being so open about it. Now, roadmap.
Yeah, absolutely. Sorry, just on that, and absolutely. And I know there's, over the last few weeks, some people have said some things about us. They said we're going to dump our tokens because we have a big reserve. I mean, that doesn't make any sense, right? We're building a business. We have a greater vision in mind. People have read our white paper. They understand what we're doing, the partnerships and all that. Why would we do that? It doesn't make any sense, right? So people need to be careful. They need to listen to us. They need to trust us to some extent. But I think our history and what we've developed has shown that we've always delivered on what we said, and we will continue to do that. And people need to be really, really careful with the speculators and the traders, because they're spreading news and they're spreading lies to affect the price in the market. And the guys that are so uninformed, or they're a little bit of a herd movement, they basically fall into that trap. So all I'm saying is people need careful with that stuff.
You raise a good point, because there are certainly groups out there, from my understanding, that do deliberately try to disaffect or change that price so that they can capitalize on that for a future gain. So you raise a point in the inherent risks of this super volatility that we see in the entire crypto space. Now, what about some of those rumors, though? You mentioned them. One of them was with regard to lockups of tokens. Let's just go there, Sash, and sort this out now. Some people suggested that you can access the locked tokens to benefit the internal team. Talk us through what exactly were they talking about, these rumors, and they just hit the nail on the head. Let's get through this.
Yeah. People said basically that we are selling tokens, and we're basically offloading tokens, which isn't true. Let me just bring up, I've got my tokenomics sheet here.
Right.
So effectively, just to give you everyone a rundown, we sold 69 million tokens during the token sale. Mm-hmm. The team have a reserve fund of 45 million. The founders and the team have basically a token allocation of 50 million, and then there's been the token sale cost of 5 million. That makes up 169 million tokens. Mm-hmm. That is the total supply. The circulating supply is roughly 75 million. So in October 2018, the founders and the team have deferred their vesting for 6 months, which effectively means only the team tokens have vested. So that is 1.8 million tokens from the team. Instead, 10 million or even more.
Right.
The token sale, we've used up 4 million tokens and 1 million haven't been used up. So funnily enough, our circulating supply should be 75.867, but it's only 75. So we've we've released less than we could have had.
Mm-hmm.
So now people saying to us, we're dumping. Well, we're less than what we distributed and what we said in the white paper. So we're actually done much, much better for the community. And what's happening, I think there's about 200 to 400,000 CHX effectively distributed every month. Mm-hmm. And that's part of the token sale costs and some of those things to stay within kind of that limit. Right. And that's for contractors. So we're paying a few developers and contractors with CHX. We're also paying a few marketers for marketing type of activity for CHX. Whenever we can, we like to distribute and give people CHX because it means they're vested, they have an interest in the token and the business as such. Always actually quite happy when someone accepts CHX.
And
but there's nothing bad about it. It's all within the economics. Yeah.
And Sash, I'm glad you pointed it out. So right from the outset, that potential to utilize in such a way with the contractors, the marketers, that was all pre-planned and planned out rather from the beginning so that it could be done. Now you're saying that it's transparent. Obviously people have looked into it and they can see that, but that correlates exactly with what you're saying right now. It explains
Yep.
So thank you for clarifying it. I won't be asking you that again. Yeah, I don't see the point of it.
It's good to clear it up. There's nothing for us to hide. And I'm just getting really pissed off with people just making up and saying, oh, the team is dumping. Why would we dump? It doesn't make any sense.
Yeah, but I mean, I'm glad that we can clarify it, move on, and address it head on. I think that's the point because it's all about trust and transparency for all of us in this game. Now, competitors as well, Sash, let's go there for a moment. There are some out there right now trying to do something similar to you. Why are you still leading the way, if indeed you are?
I think, well, we see a number of competitors. There are a lot of competitors that are doing issuances. So they do an issuance. So they can take your equity or whatever it is, and they can tokenize it, and they can run it through the tokenizer 3000, and they can do some magic, and then you have tokens. And they only do that. It's a technology platform or something like that. What we're doing is an end-to-end service. We're not just tokenizing an asset. We're also helping these businesses to get legally compliant, to get regulatory compliance. We're also helping them with structuring the offer and the sale. So for example, some will do an institutional pre-sale type activity, and we're helping them and giving them some advice around that. So we're basically a full stop shop.
Got it.
There are some that are just building the technology. There are some that are open source and they're just building the back end. And again, we're doing the end to end. We have a platform and we bring businesses to investors. And the biggest factor that we have is we bring these businesses investors. This is the key thing. Anyone can list anything on a platform, but do you actually have investors that will pick up these opportunities? For a business, it's not so much important on which technology or platform they're running. They know if I do a 2 million STO, I'm actually going to sell out. And that's what we're focusing on, having really an institutional investor network where some of these offers will effectively be oversubscribed and will be picked up. And for a business, that's the most important thing. Otherwise, anyone can do an STO on a spreadsheet. No?
Sure. So you're essentially also selling to those enterprises the network itself that you've built by having all these parties that are literally waiting on the other side to do business.
Absolutely.
Okay, and that's invaluable because the other team, the people who set these up, they don't have the resources all the time, and that's exactly why they go to you. But let's explore this in the context of the plan for the roadmap and the mainnet, because obviously things are building right now, Sash. It's not long, a few weeks away now. Yep. What's the time frame? Yep. What's the plan? What's to come?
So mainnet launch is just around the corner. So we're working at the moment on just hardening security, making sure that the performance is working. We're also working on an updated wallet because obviously you need a wallet and all that. We've got an open source community in the background, university that are building a block explorer. Mm-hmm. And so we don't actually have to build it based on our blockchain and all that, and that is great. We're ineffectively, we're taking our time. We want to make sure we're testing. I think we'll do a friendly run for a period of time with a few node operators that we know that have enough CHX, because you need to stake CHX, and making sure that everything works properly. We will announce the whole token swap and how that works. Again, we will take our time. We want to make sure that everyone is able to swap their ERC20 to basically our blockchain. All of that will be announced in the next coming weeks. Again, we want to make it as user-friendly and as nice as possible, as we've always done to our community and to people holding
right.
the CHX.
Now, in terms of effect as well, mainnet, once it exists, is that going to make the engine fire? You know, not to FOMO this, but what's the big change for in terms of efficiency, productivity? Is it going to really be a significant change for you?
For us, absolutely, because it's our blockchain and obviously we have the usage. I think people will see that CHX is ultimately being used. It's good for these businesses operating on our token environment and our ecosystem, because you will actually see all that transactions and everything happening. Obviously, for us, it's a much more alert period, because we will have a production blockchain to manage and maintain. So it will be a critical period for us. And as we know that if you screw up a mainnet, it's a hard time. You can't recover from that so easily. So we want to make sure that everything works 100%.
Got it. So you're taking your time to get it ready. Now let's discuss your token itself for a moment. Now, we've all made it clear from the outset, you are a pure utility, not this pseudo utility or fake security that we see exist in many different startups. Talk us through those, Sash. Almost a paradox in itself. You're an STO issuance platform, but you're a utility token by design for your own economy. Why did you do it? And how can you prove you are truly that true utility, rather that's going to really provide for the transactional value for the whole ecosystem?
Yeah, I mean, the utility token, our CHX token, is really for the transactions underneath. It's for services, usage, the staking of when you set up an offer, self-service on the platform, you need to stake 1%, and that just ensures that businesses are credible, businesses have an interest to go the whole end-to-end. CHX is also used as software licenses. So with some of the traditional businesses, we are selling CHX transactions to them. So they basically use it as software licenses, so they can use 100,000 or 1 million transactions over a year, and that'll cost them X, Y, and Z. So that's what's happening in the background. So in the true sense, it's like it's a transaction. It's a transactional fee. We have the nodes, the operators, they need to be rewarded and incentivized based on CHX. They need to stake CHX with a maximum of 50 million of the supply. So that there's a lot of different use cases. And we're always looking at new use cases. We have a workshop in a few weeks where we're looking at where can we also use CHX in future in the true sense of a utility. But what you can never do is you cannot pay with CHX as such. You cannot buy equity or debt or whatever with CHX. It's a utility token, will be used for the platform.
Got it. So it's not a payment coin. It's not a settlement system. Got that. But let's go back a bit. And this is the big important part, the correlation factor. Now, how are you going to explain clearly the correlation between the utility token itself and the volume and growth of your whole ecosystem as a business? Because that has to correlate, even though there's a utility arguably. So you're moving into the back end for handling and control. Why is all of that so important?
Well, I mean, the correlation between the business success and the utility token as such is if you are successful as a business, you have a lot of transactions and all that, obviously your utility token is even used more and more and more. So you've got the whole factor of supply and demand. I think we as a business, we want to be successful as a business because we want to be the #1 provider for, helping businesses raise capital or managing debt for corporate and enterprises. But yeah, again, utility and CHX is really, really important for us in the background.
Right. But I have to push this more, Sash, and my apologies, but we're going to have to do it. So obviously, sometimes when we've spoken in the past and other parties, we've seen things like spikes in price as we still are moving towards a more stable system that's going to remove some of this problematic volatility. So talk us through that, because you're going to really need to have this a much more overt correlation, because you're moving so quickly towards this utility and mainnet is coming. Yeah. So talk us through these challenges that you see now and how you're going to reduce them so we can see the emergence of utility. on the, in the charts.
Yeah. I think the issue is at the moment what you're referring to. There's speculation, and basically the hope for something, but there's no real usage in the background. And I think that is the issue. I think once we're on the mainnet and once CHX is being used, that speculation will go away because you will see the volume.
Yep.
And we are putting reports out where you can actually see that, and you can actually see it because CHX as a whole will be used, right? So we're hoping that over time there will be a much more stable token value rather than this current spikes and all that,
right?
Which we're hoping is based on utility and usage. And we will do everything to explain to people the usage, and we'll put reports up, statistics to explain to people this is the current usage.
Yeah. Sure, it makes a lot of sense as well, and obviously that's reflected in the whole point of it being a utility token. Now, let's, I guess, move into some of the discussion of ICO as opposed to STO. With respect to, you did your raise, you raised your capital, and now you're also essentially trying to support STOs. Do you see that do you think there's still a place for utility tokens, given you are one yourself, despite obviously the narrative of securitization being relevant?
I think there's a place for utility tokens. And I think we're seeing, with Facebook Coin or whatever, a utility token coming on board, you see big companies and businesses introducing a utility token. I think it's kind of the storming and norming, right? With everything. You had the ICO craziness in 2017. Everyone that did a token sale was successful. And then you had 2018, the bear market, where, the weak from the good were starting to separate, and you can see that now in 2019 even further.
Right.
I think once that establishes this year, next year, and the following years, I truly believe you will have utility tokens, and they might be few. You will have security tokens, you have other tokens and other asset forms as such. And I think utility tokens have to grow up. They have to become more regulated. They have to become more compliant. I think at the moment it's too easy to do an ICO, or it was too easy to do an ICO. So you had a lot of marketing teams doing a lot of marketing without any depth.
Right.
But at the same time, as you know, investor sentiment, investors have grown up. Investors don't fall for big names and marketing as much as they did. I think there's still an element of that, but I think they are getting much more educated. And that's what I love about just humans and economies as such. Over time, it always balances, right? People lose money, people get educated, people grow up, and I think that is good for the market. But I think there will always be a utility token or some form of a utility type token.
And it seems also the legal systems are supporting both. Is that fair to say as well, Sash? Is that you know a lot about the law in Europe? Clearly, they're supporting with their innovative thinking, right down to legislation, not wanting to stifle this innovation, but also they want to support securities if indeed someone chooses to do that option.
Yeah, absolutely. I mean, if you look at Liechtenstein, the Blockchain Act, there's a specific reference to how you deal with utility tokens, and that's a part of the law. And other organizations, you see that in Europe, other governments and financial markets are introducing the concept of a utility and an asset that is a utility, and it will be written in law. I think that's happening now. But again, the whole industry is growing up. I think it's a great model. It's a great concept. But I think investor protection still needs to come a long way.
Got it. Now, Sash, here's a tough one. I don't know if anyone's ever asked you this, but you have a very clear utility structure, pure utility. You've explained it. You talk about STOs as the real world, new wave technology and new wave business model. But what about you? Are there any plans for you yourself with shareholders, as a system, to have a securitized mechanism in place for yourselves so that people can say, I own a piece of you?
Yeah, it's a great question, Brad. We get this asked more and more now. And yeah, I think we have to do it at some stage, right? We can't be a platform to do security tokens and equity, and then we don't do it ourselves. So in a way, I think we have to do it. Otherwise, we're just looking not credible in that sense. So yeah, I mean, we're having a few discussions at the moment. I I can't disclose much, but I mean, generally we just have to.
Right. Well, make sure you let the public know, because obviously they'd want to know that. Now, obviously, you're feeling confident about regulation. We can sort of pass that point. But I guess the thing I wanted to ask you now is proof of adoption, all the way through to participants, right through. In a general comment, are you confident, Sash, that you're hitting that mark and that you're achieving that adoption endeavour and outcome that you need to prove that you're viable?
I think the whole industry is so new. I think it takes stamina, and it takes, you get a lot of knockbacks, right? I mean, we're talking to a lot of businesses and enterprises, and vetting them is hard, and there's 90% dropouts that just will never ever issue a security token. And with enterprises, you're getting a lot of kind of, it's just all a bit slow in that sense. I would love to have it going faster, but it's just the way it is. It's the industry, it's too new. The industry needs to grow up. I think cryptocurrency still has a bad rep, and we're not actually using that as a reference point.
Right.
But I think any business, anyone working in that space, and we have competitors, you have to give all of them credit because they're working on something that doesn't exist.
Right.
And when you innovate, when you introduce new technologies, new ways of doing things, you're by nature always hitting certain walls. And we're the same as anyone else. And all the competitors that we have, I have the deepest respect for them because I know how hard it is in that space, because
Sure.
It's a traditional business, and especially equity is the most complex one you can get into in financial services.
And obviously, Sash, you're threatening the current status quo. You're threatening the old world of money and of business. And many of these enterprises are substantial, and they don't really know what you're all about. And they're concerned, no doubt, you're going to take a significant market share of their money.
I don't think so, because I mean, first of all these kind of STO businesses are small in the scheme of things, right? And the big guys, they have a certain element of arrogance, but they also have a certain element of established presence in the market. So as a small guy, you always have to kind of like fight against the tide, if that makes sense.
Right.
And especially in financial services, there is a layer of arrogance where people are saying, oh, these guys are small, they will never ever, kind of hurt or hit us. But as we've seen with digital banks, a lot of the challenger digital banks have made some great progress and have taken a lot of market share and customers away from the traditional banks. And that's the way we see it. We want to slowly really establish the model, making sure that people understand it, making sure that it is an easier mechanism, it's cheaper, it is safeguarded, it is protected, and then we will take business away more and more and more and more.
Right. So Sash, talk us through your vision in the next, let's say, 5 years or a decade-long vision with respect to the knowledge you've had of the ICO bubble. We've seen the funneling effect now of the reductionist approach of trying to find the real utilities. Do you see that kind of pattern playing out with the STOs, especially given that all kinds of responses right now, from the bubble concept all the way to overinflated hype from the other side in this polarized view? What is your position on the sort of the long-term potential of STOs?
I don't see it as a bubble as such, and I don't see there's going to be this hype phase, because it's a real use case. You have equity, you have debt, you have funds, you have bonds, you have all these sort of things, and these vehicles exist. So you're not introducing something new. What we're doing is we're further digitizing these assets. We're providing a means to something that already exists in that sense. Yes, people need to, the market will not change overnight. People have expectations that suddenly you're tokenizing trillions and trillions overnight.
Right.
That's not going to happen. But I think we have much more acceptance in the STO space than you have in the ICO space, because it's unregulated ICOs and utility tokens. People don't understand it. People don't see the value behind it. Whereas with a digital asset, you have an asset-backed token. So there is an asset that people understand and can relate to. So the acceptance is much, much higher. So I don't see that as a kind of like a hype cycle type initiative. I think it's just an extension of digital.
And clearly also as well, Sash, is the fact they're going to have ownership and dividends. That's a big change from what we see right now. And it's what everyone's, I would imagine, is really screaming for, because they've had arguably many bad experiences with the fake I guess, utilities or the fake securities they thought they were getting when they purchased, when in fact you're just getting a promise in many cases and nothing more. Again, that narrative will change. Some of them, as you said, have got evidence of real utility. Your own token's one of them. But yeah, we're going to see some changes arguably where we can see the choice of the options to move into something like that if they want dividends, if they want ownership and want something beyond. Now, with regard to regulations, I want to talk to you about that. There's suggestions with Reg A plus, Reg D, Reg S, that many different parties in this very small group, you included, could potentially be having discussions with the SEC to expedite the processes of regulation. Are you part of that? Are you involved in trying to help foster and promote?
Absolutely. Yeah, absolutely. We're talking to them directly, and we have a number of sessions and meetings, and we're trying to help. The regulator needs to understand, generally the regulator regulates. The regulator watches and sees, and people need to understand the regulator has introduced procedures and processes to protect the investors and protect the businesses over time period. So one of the things you cannot just rock up to the regulator and saying, I'm going to change the market and this is my platform, this is what I'm doing. It's not going to work. You need to explain to them, and this is really, really important, what you're doing and how you're actually ensuring that the same protection and the same mechanisms still apply, because they've introduced rules and methods that they don't want to see go overnight. So if you rock up as a startup and say, I'm going to change the markets, and they're just going to laugh, and they're just going to be like, yeah,
right,
nice try.
Okay.
So you have to explain to them why you're doing certain things, why you're introducing models. And if you can actually make their life a bit easier or give them comfort along a journey, they will ultimately help us. And we've seen that, especially in Europe and in Asia and now in the US as well, is that the regulators are very much interested in understanding innovative concepts. The governments are very interesting to see more disintermediation, because it means less fees, which means more economic wealth for everyone in the country. So they're very interested, but you have to be careful. You have to be explaining to them certain things, and you have to play by the rules. Otherwise, it just doesn't work.
Got it. I see. So also that's where your experience comes in your financial background. You've been there for, decades long now. And that experience is, obviously really been of great benefit to this new and exciting venture that you've taken on with decentralized ledger technology. So obviously, to recap though, there's a lot going on for you, Sash, right now. Mainnet's coming up. You are all about being compliant. You're the most important thing I think I could really impress upon people is understand that they are doing business right now. Yes, STOs are really complex and that they're going to take a long time, but what Sash is explaining is that they are going through those hoops and doing business in that interim period. So Sash, thank you very much for your time. Obviously, for those who want to find out more, there's a lot of platforms you can go to. And Sash, I understand there's also an ebook that you're putting out.
Yeah. There's a lot of myths and rumors. What is an STO? How you can actually do one? What's the process involved? There's a lot of marketing, obviously, where people are saying, "Oh, you can just go to the platform and generate tokens, and then you have to go." So what we're working on is a really full, comprehensive ebook where it explains the process. It also talks about our platform, how things are being made easier, and also explains the auditing, the legal side around it. It explains the different kind of exemptions that you need in the US. I will obviously add the Asian angle at some stage as well. So we just want to make sure that the market or the people as such are being more educated what actually is involved with an equity-backed token.
Absolutely.
And that's why we're creating that.
Got it, mate. So if you'd like to know more, make sure you check out the ebook that's about to drop some stage. There'll be links down below also for all the different information and places in which you can access more, such as Medium, Telegram, that. But Sash, I'd like to thank you, as you are the CEO of the Own Network. You are leading the way with something that is not just innovative, but arguably one of the world's first to try and capture the imagination and the possibilities of new business models that really allow people to literally own some digital assets and be part of a fractionalized economy that really does definitely give people more options, especially those who've never had that chance before. So thank you very much for your time. And I would love to speak to you again in the future if you'll have me on.
Always a pleasure, Brad. It was great. Thank you.